Okay, let's jump right into it. So I'm going to start with market structure. And then I think what I'm going to do is I'm going to start with market structure. I'm going to go to, after we cover market structure, going to go to support and resistance. And then lastly, we're going to cover SMC. So, and also I'm kind of going to have to blend 2 and 1 in some lessons. For example, what I mean by that, like during the market structure lessons, I already know I'm going to have to use like the fair value gap example because that is essential to determining strong market structure breaks. So I know I'm gonna have to go over the fair value gap during the market structure lessons as well. I'm gonna be blending some concepts together in, certain lessons, but I'm also gonna give every single concept, every single trading methodology. I'm gonna have a specific section dedicated to each concept, but there's gonna be lessons where it's kind of blended together and I talk about several different things in one lesson, like market structure, fair value gap. But watch these lessons. Don't just watch them once. I want you to watch these lessons at least a couple times. Every single video in the series, I want you to watch it a couple times. I want you to go into your own charts. I want you to follow along with me for the best learning experience. If you're just watching these videos, you're not going into your own charts. You're not looking at old data. You're not looking at, you're just, binge watching. You're not going to get any use out of these videos. Okay. I need you to put in the elbow grease and actually go into the charts and follow along with me. All right, so as I said, first things first, we're going to be starting with market structure. So we're going to be starting with market structure first. And really, guys, just by having a firm grasp of market structure, that's really the only edge you need in the marketplace. I'm going to be talking about SMC. I'm going to be talking about support and resistance. But guess what? If you just have a firm grasp of market structure, that's really all you need in regards to technical analysis. And then you just manage your risk, you manage your emotions, and boom, you're good. So market structure is very, very, very important. Having a firm grasp of this. All right, so what is market structure? What does it look like? Well, this is also, I know some of you guys may not like the drawing pad, you like the real chart. This is going to be the only video in this series that I'm using the drawing pad. All the rest of them will be with a real chart example, but I want to take it step by step, bite by bite, because there's also, you got to consider, there's also some complete beginners that are watching this. Some of you are a little bit farther along, you're a little bit more advanced, so you're like, why is he on a drawing pad? I don't want to see this. Well, there's different traders in this chat. We're going to be getting into a little bit more of the advanced stuff as well, but we're going to start off with the absolute basics. What is market structure? Well, when something is operating within a bullish market structure, it is going to be consistently putting in higher lows, consistently putting in higher highs. So you'll see something like this on a price chart. Price will be consistently trending up higher, trending up higher, trending up higher. That is a representation of something that is operating within a bullish market structure, consistently putting in higher lows, consistently putting in higher highs. That is bullish market structure. Something operating within a bearish market structure will be consistently putting in lower highs, consistently putting in lower lows. It'll be consistently trending lower. It'll consistently just be moving lower, moving lower, moving lower. I know I got a little bit sloppy right there, but moving lower, moving lower. That is something that's operating within a bearish market structure. Okay, that is at the simplest form what it is. Now, how do we know when something is going from bearish to bullish? So we've already concluded what bearish and bullish market structure looks like, but what about when does something like switch from bearish to bullish, for example? So like say something is operating within a bearish trend, it's consistently trending lower, for example. So like it's consistently trending lower, trending lower, trending lower, trending lower, trending lower. When does that switch happen? How do we know when price is going to make that switch to the upside? Because if we can identify that switch on the upside, then we can capitalize on that change in structure, that change in trend, and we can capitalize on higher prices. So how do we know when price has made that switch? Well, we don't know anything. So let me correct myself in my language because I like to be very, very specific with how I speak to you guys. Okay. Like what criteria do we look for that tells us that price is more likely than not to have a change in trend, to have a change in structure? What is the criteria that we look for that tells us that that switch has occurred? What do we look for? Well, what you're going to look for is you're going to, step number one, for a shift in market structure, for a change in market structure, you need to see the shift. You need to see price break a previous high like that. That's going to kind of be what it looks like. It's going to break. It'll be, because remember, previously, it was operating within a bearish market structure. It was consistently putting in lower highs, consistently putting in lower lows, lower lows, lower lows, and then out of nowhere, boom, you get a nice big move to the upside, breaking a previous high. That's what you want to see. That is step number one for identifying the change in market structure, the change in trend, is you need to see it break a old high. Step number one. But it's not confirmed just yet. Let me make that clear. It's not confirmed just yet. That's step number one, but there's a few other things we need to see play out here to really determine if something is a true change in trend. Well, the next step is we want to see price retrace lower down within this price range, okay? And then we want to see it put in a swing low. What is a swing low? Again, in the next lesson, we're going to be going over on a real price chart, so it'll make perfect sense. But whenever we're looking at a price chart, we have candles. We're looking at candlesticks. Whenever we have a swing low, you will have your lowest candlestick in the middle, and you will have two higher lows, two higher candlesticks on the left and the right, making that swing low level. And it's the opposite for swing highs, which we'll be going over here in a second. But that's what you want to see. You want to see it break an old high. Step number one, complete. You want to see it retrace within that range. Step number two, complete. You want to see it put in a swing low. Step number three, complete. At that point, it's confirmed 100%. Its market structure is confirmed bullish at that point. And that is, at that point, it is a confirmed change in trend, and then you can start looking for you can start looking for higher objectives at that point. You could start looking for that criteria that we talked about earlier to play out. See it break the highs, put in a lower high, break a high, put in a lower high, make a new higher high, put in a lower high, and then at that point you have a change in trend. Okay, here's another scenario that's going to happen sometimes as well that I want to, it's just very important. So I want you guys to pay close attention. This is a gold nugget moment. Now, sometimes here's a very important thing I want you guys to note. All right, get your notepads ready, write this down. Sometimes, like whenever you have this shift in market structure like this, it'll break that high, it'll pull back within the range, it'll pull back within that range, it'll put in a swing low level, and it'll be confirmed. It's going to look so good. It's going to have everything that we described in these lessons. You're going to get in, you're going to remember what I told you. It's like Mike told me, this is 100% confirmed bullish market structure. We headed higher, baby. We headed to the moon, right? And you know what's going to happen? It's going to stop you out. It's going to tag those lows. You're going to be wrong on the trade. That's going to happen sometimes, guys. We use these examples where where all the trades are winners. Every trade has worked out in our favor. Guess what? This scenario is going to happen as well. And that is perfectly, perfectly, perfectly fine. It's a part of trading. It's going to happen. I don't care how good you get. I don't care how many years experience you get under your belt. I don't care how many millions you make. You're still going to get caught in losing trades like this sometimes. You're going to mistime it sometimes. You're going to get stopped out sometimes. That's trading. That's part of it. But if you manage your risk correctly, which we'll be going over that, if you manage your emotions, you get your psychology under control, we're going to be going over that, and you keep executing. That's the key. Keep executing. The chips will fall as they may. You got to give your edge time to play out. The casino don't win every hand, guys. He don't win every time. The casino don't win every time, but damn sure it wins over the long term. That's how you got to think. So sometimes it's not going to work out. Sometimes you're going to get stopped out. Boom, fine, right? But we went over what that shift looks like and when it's 100% confirmed. You need that shift, and then you need a swing low put in. At that point, it's confirmed. You're good, right? So let's go over the other scenario, which is basically just the opposite. Say something is operating within a bullish market structure previously. It's consistently trending higher, consistently trending higher, consistently trending higher, consistently trending higher, consistently trending higher. How do we know that trend? How do we know that change in trend is going to happen? What criteria do we look for? What do we look for? What did I teach you just a second ago? We want to see it break that previous low. We want to see it break a previous low. Price was consistently putting in higher lows, consistently making higher highs, and then you want to see it break a previous low. Step number one, complete. Next, we want to see it retrace within that range. Step number two, complete. Step number three, we want to see it put in a swing high level. So you'll have your highest candlestick in the middle with two lower candlesticks on the left and the right. Step number three, complete. 100% confirmed. Bearish market structure is confirmed at that point. That is a confirmed change in trend. You can begin looking for lower objectives. You can begin looking for that change in trend. That is what it looks like. That's what you want. All right, in the next video, we're going to be going to a real chart environment, and we're going to see what this looks like on a real chart environment. Okay, so I will see you guys in the next video.